Morning everybody, David here again sitting in for Carl this Monday the 11th of May. Hope you all had a good weekend, and in particular, even though it's a day late, happy Mother's Day to all the mothers out there. Hopefully you spent some quality time with probably one of the most important people in your lives, and that is your mother. Hopefully by now you should have all caught up on the macroeconomic session from last Friday that Jeff and I did. We talked about the economic data that came out last week, so we reviewed that. We also had a bit of a look at the economic data that was coming out for this week as well. So hopefully you've enjoyed Jeff's input to all of that. Certainly he brings a vast amount of experience with his obviously very in-depth knowledge of fundamental analysis and what some of that data really means for the markets. And those of you who are in Jeff's Elite Investors Club, obviously, taking a little bit further and seeing what that data actually means for companies specifically. So if you've got any feedback on those economic sessions, the macroeconomic sessions that we run over Friday afternoon, please shoot me an email. Again, don't forget my email address, davidm@elitewealth.com.au. Okay. Let's get into it, but first, as always, we need to go through our disclaimer. And the disclaimer basically says that the content of this presentation or any other Elite Traders Club presentation does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, or particular needs. So please consult your licensed authority before taking any action based upon the content contained in this presentation. The rest of the disclaimer can be read as part of the Financial Services Guide and is available for viewing on the Elite Wealth website at the conclusion of the webinar. Right, the agenda for today, we need to go through and have a look at the portfolio management, see whether anything's happened on the market over the last week. Just a recap on some of the amendments that we've made over the last week, just to make your trade management a little bit easier. Then we're going to go through and have a look at some specific setups, and then obviously some time for some Q&A. Alright, those of you who were watching the market last week would have noticed that we've had a bit of a change in the portfolio management. The only change, however, was that in the Australian market, where we have just dipped below 80 on our stochastic, on our market risk indicator. So we've gone from a low risk market into a moderate risk market, and so therefore we use a 80% market risk multiplier. Good morning and welcome to this week's Elite Traders Club session for Monday the 11th of May. Again, warm wishes to all, or best wishes to all those mothers out there who yesterday hopefully had a very pleasant Mother's Day. Let's get into it this week. The Silver Fox is smiling. He had a good time yesterday. Before we get much further, disclaimer, and the disclaimer says that the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So please consult your licensed authority before taking any action based on any of the content within this presentation. Alright, let's get into things. The agenda for today, the portfolio management. There has been a change in the Australian market compared to the US market, which still remains at low risk. We're going to go through and have a look at some amendments that we discussed last week, so just clarifying those and consolidating those for you. Then we'll go through and have a look at some specific setups, and then obviously some Q&A. So let's go and have a look at what's happened on the benchmarking model in the ASX 200. So if you were having a look at your charts during the course of last week, now you probably shouldn't have been, because we are on a weekly periodicity and we only check our charts in alignment with that periodicity. But certainly on Friday night you would have known, when you had a look at the market risk rating in preparation for this following week, that the market risk rating has gone from low risk in the Australian market to moderate risk. And so what's happened there, and we'll have a look at this in a moment on Beyond Charts, is that our stochastic has dipped from above 80 to just below 80. And so therefore, instead of using 100% 100% market risk multiplier, which is what we use in a low market risk, we have to apply an 80% market risk multiplier. In the US, there's been no change to the market risk over there. We are still in low risk market over there, so we apply a 100% market risk multiplier. So what does that mean? Well, in the case of the Australian market, an 80% market risk multiplier. Now, these two slides are basically saying, assuming that if you have a portfolio that you are distributing half of your capital between an ASX portfolio and half of your capital into a US based portfolio. On the basis of that, in the Australian market, half of that total maximum drawdown of 15% is 7.5%. We apply a market risk multiplier of 80%, and we end up with a 6% maximum allowable drawdown, or another way of saying that is a 6% VARP. Okay, value at risk across your portfolio, and that's for the Australian market. Let's have a look at the US market. We're still in low risk market over there, so half of our portfolio, that's 7.5% of our capital, we apply a 100% market risk multiplier, and as such that allows us a VARP, a value at risk across our portfolio of 7.5%. If you've got any questions about that, or you're having trouble working that out, or don't quite understand it, again, don't forget to give one of our coaches a call, or again, you can just click on the request coaching call in any of the emails that we send you, and that'll go through to the guys and they'll be able to help you with that. Alright, in terms of variable risk reward scale out events, we discussed last week whether it was appropriate to use scale out targets along the way, and certainly the research suggests that trailing our stop along the way helps us to accrue those much larger profits. It doesn't always guarantee that every trade is going to deliver a larger profit, but we're in the business here of growing our portfolio over a period of time, and if we're patient, then the use of a trailing stop allows us to do that. Those of you who still want to scale out, that's okay, you can do that. And the implication here is because in the Australian market we have dipped down into moderate risk, that you are looking for 2-to-1 risk reward scale out events or scale out targets. In the US, those of you who are still wanting to scale out, that's fine. You just need to make sure that you are looking for 3-to-1 risk reward in terms of your scale out events over there. Okie dokie, so just a few notes, I guess, on the amendments that we've made over the last week. There won't be too many amendments along the way, but keep in mind that the amendments are really to make trading and managing your trades much easier and less complicated. And if they are less complicated and easy to do, then you will find that you are able to stick to your plan, your convictions much easier than being perhaps a little bit perplexed at all the different rules that you might need to remember. So going forward, again, just remembering that the macroeconomic session is on Friday afternoons. Generally that'll be in the afternoon, early afternoon, and we should have that out to you before the close of business on Friday afternoon. So that's in preparation for next week. So again, we're recapping on the week that we've just had, the impact of that economic data, and then we're having a look at the data for next week in the US and here locally. And very much enjoying Jeff Saffer's contributions there. He brings to the table a wealth of experience from a fundamental background and can really break open a lot of those sets of economic data and the likely impact and the importance as well of that data to each of the markets, both here in Australia and overseas in the US. Wednesday afternoons you'll continue to see education sessions at 4 p.m. and they will generally go from anything from about 20 minutes through to around about 45 minutes. So I'll be bringing to the table recaps, if you like, or reteaching of key concepts in your trading plan. I will also be bringing to the table some external material that I think, from your own point of view as a development of a trader, will be food for thought, and I'd encourage you to keep an open mind, because as we all know, trading is a journey, and our job as a trader is to try and keep things as simple as possible, but always endeavour to learn new things along the way that can help us either benefit either psychologically, and I'll certainly be running some sessions on that, how to keep you a level head when the seas become a little bit choppy, but also some more information about some use of technical indicators, statistics, etc., a little bit of history of trading and those sorts of things as well. A recap on our trade management methodology. Again, we are using a trailing stop mechanism for the exiting of our trade, so we won't be using targets per se to exit our trades. All we're simply going to do is set our initial stops in exactly the same manner as we always have. So what does that mean? Well, it means, assuming that we have our price action all correct, then the setting of our initial stop is going to be at least 0.5% below the last medium-term trough, and is going to be outside of 2 ATRs. Okay, so there's no difference there whatsoever in the setting of our initial stops. The one thing that will change is the trailing stop methodology. So all we're going to do, we're going to keep our stop at the original location until the trailing 3 ATR line, and I'll show you this on Beyond Charts, comes up and passes that initial protective stop. And from that point of view, all we have to do is watch where that line goes, and that's where our trailing stop is. Each week we just need to see whether the line's moved, and if it's moved, then we just need to amend our trailing stop. And those stops in both cases are all soft stops. It will have some implications for the watch list, and I'm in the process of going through that with all the US trades. And the watch list at the moment, if the current stop, if the 3 ATR line has not come up and passed the current stop, then the initial stop as it's in the watch list remains, but once that trailing 3 ATR comes up and passes that initial stop, it will be trailed in the watch list accordingly. Might take a little bit of getting used to, a couple of weeks, but I think from then on in you'll find it a whole lot easier, and something in particular which I think is really important, that you'll be able to do it yourself. And so this is really all about empowering you to make you become independent, so you can do this on your own right, not just now, but for the next 6 weeks, 6 months, 6 years, 6 decades. I think it's a valuable thing to be able to do to manage your trades confidently and competently on your own. Right, so what we're going to do now is go through and have a bit of a look at Beyond Charts and see what's happened on the market in terms of our indices. So you'll see here on the XJO, the Aussie market there, that our stochastic indicator, the oscillator, which oscillates, moves up and down between 0 and 100. It's been above 80, so anytime we are above 80, we are in a low risk market environment. And as such, we've been in there for a little period of time. Just recently, we've dipped down below 80, which takes us from a low risk market environment into a moderate risk market environment. And at the same time, our market risk multiplier has dipped from 100% down to 80%. So as an example, if you were just trading the Australian market and you had a 15% maximum allowable drawdown in your trading plan, then under a low risk market condition, that means that you're allowed to have all of that 15%, i.e. 100% of that 15% exposed as value at risk in the market. Now that that stochastic has dropped down below 80, we are in a moderate risk market, so we use a 80% market risk multiplier. So 80% of your 15, that brings that down to 12%. So if you're trading just Australia, that just means that you are allowed a 12% value at risk across your portfolio for the time being. Now that's only just dipped down over the last couple of days. I wouldn't be surprised with the strength of the US market on Friday night that we see a positive start to the week, and maybe if that strength continues, our indicator may well move back up, but we'll just have to wait and see. I'm not looking into the future too far for that. So that's the XJO. And the S&P 1500, our benchmark in the US there, you can see that the indicator is still above 80, so we're still in a low risk market over there. So if you were primarily trading the US market, that was your main market, and your maximum allowable drawdown or your maximum value at risk in a low market condition was 15%, then you are still allowed that 15% value at risk across your portfolio, whilst that indicator remains above 80. So that's the benchmark indices that we're concerned with primarily. What I might do for the moment, there wasn't too much that happened on the way of commodities over the weekend, other than I was interested to see iron ore, which will go down. That's on a weekly chart. Go back and have a look at a daily. You can see that iron ore has come off its lows down at around about 44, and we're sitting up at around about 60 at the moment. The Aussie dollar we looked at last week, we noticed coming up towards the 80 cent level, and we put in a pin bar there, a bearish pin bar. Interesting to see that last week with the RBA decision. Typically when we have a lowering of interest rates, it's typically bearish for that particular currency. I think there was a lot of thought in the markets from a lot of the analysts that perhaps this may well be the last interest rate cut for some period of time, and rather than the Aussie dollar tanking on the back of that news, it actually gained some strength and moved back up over the 80 cent level there during the course of the week. So interesting times. Typically when interest rates go down, it's bearish for the currency, but who knows, these days all sorts of things can happen, and it's really just got to do with expectations in the marketplace, and what the analysts are expecting going forward as well. So that's the Aussie dollar. Let's go through and have a bit of a look at those trades that did trigger over the course of last week. In the US last week, I had some pending trades which I'll go into. Let's have a look. Pending trades. In fact, no, we'll go into the weekly opens. So what I've done from last week is I've put them into a, using Beyond Charts again here, put them into two different lists. I've got a weekly opens list, so any of the trades that have come from last week in the pendings, I've transferred into a weekly opens list for both the Australian market and for the US. So last week we had AHD in there, which you can see has triggered. So that trade now is in the opens watch list. The other one that triggered from last week, there was a couple. CZZ, Capilano Honey. Had a very strong week last week, moving up, and then obviously when we had the interest rate announcement throughout the course of the week and a bit of weakness in the rest of the market, it came off its highs, but still by comparison a fairly good effort given what the market did last week. So that's Capilano Honey there, and again I've got that $14 scale out level there. That's for those of you who choose to scale out, but again just remember that all we're going to be doing is waiting for our 3ATR trailing stop, which is this green line down the bottom, to move up to our initial stop. When it does, we're just going to follow that trailing stop until price closes below that trailing stop level, and then we're out. So that's Capilano Honey. That was one that triggered. Another one that triggered was My Netphone, just triggering our entry level there last week, but a very nice candle to boot. A nice strong white candle, again showing really good relative strength compared to the rest of the market, which had a bit of a downer last week. Remembering this was a long-term peak over here. We've had our first test, price retraced, it's coming back up, nice bullish candle, looking good for the time being. And again, to manage this particular trade, assuming that you're not scaling out and you're wanting to stay in the trade for as long as possible, we're just going to wait for our trailing 3 ATR, that's our green line, to come up, meet our initial stop, and then we're just going to follow the green line forever and a day until price closes below the green line. That is our trailing 3 ATR. So that was my Netphone. The other one that triggered during the course of the week was Infomedia. Only just tickled its entry level there. And again, for those of you who want to scale out, the target that we're looking for is up towards 150. But the simplest way to manage your trade is just to be patient. Wait until your trailing 3 ATR stop comes up to meet your initial stop, and then just follow the green line. It doesn't get much simpler than that. And on the basis of that, that will allow you to stay in the trade for as long as possible. All trades will run their course. Some of them will be short, some of them will be medium term in nature, and some of them may well go on for a couple of years. Alright, so they were the three that I had triggered last week. I think I'm not too sure there was another one in there or not. They were the main three. Let's go and have a look at the in the US. Those that triggered, we had BX triggering there last week, and again a nice bullish pin bar there on that the triggering of BX. So we're into that trade at the moment. Again, initial stop down here, just waiting for our 3 ATR to come up, and as it does, we'll use the 3 ATR line to manage the trade. So in the watch list, as an example, this trade will now be in the entered trades section. This will be the initial stop, 39.26. It'll stay that way until this trailing stop comes up and moves beyond there, and whatever figure that trailing stop line is, that will be represented in the weekly watch list. So BX was one that triggered. Another one that triggered was Delphi Automotive. Triggering the entry price there we had was 85.23. So triggering there, again bullish candle through here with the little green dot above. Our initial stop down here at 78.81. Again, just being patient, waiting for that trailing stop line to come up, hit our initial stop. When it does, we will then be moving our protective stop in alignment with the trailing ATR, hoping to get one of those trades that takes us for a very nice ride. Obviously at this point we're between 80 and 100, so it tends to be a little bit of a vacuum there. So being optimistic, you know, we've got a nice target there for those of you who do want to scale out up towards 100, and if you do, then the rule for that would be 1%. Less 100, less a pip, which takes us down to 98.99. They were the first three that we had, and then the last one was Acuity Brands, which also triggered, just tickled its entry point up here last week. And again, initial stop at 158.70. Nothing to do there other than wait for our trailing stop. Again, a bit repetitive. I just want to get the message clear. Wait for the trailing stop to come up to our initial 2 ATR trailing stop that we had in here. And then once it passes, just trail the stop along the line of your 3 ATR. So how do I know what figure that is? Well, a couple of ways. That trailing stop, that 3 ATR figure at the moment, is shown over here in green, 152.05 cents. Or I can also right click and put on the value line, and that will also show me the same figure as well. So 152.055, and down here 152.05. So same figure there, and you'll notice as I move across, you'll see that the value on the value line, the green figure represented by the green trailing stop, moves in accordance with price. Okay, so it's trailing price as it proceeds. So they're the open trades from last week that we had in the list. We'll go through now and have a bit of a look at the weekly pendings. So I've just opened up another workspace here, weekly pendings. So in the Australian market, I couldn't find a lot that I really liked in the Australian market. I've got a few in here for discussion. FXJ, which I'm happy to talk about. At this point, The elements of this that I do like, obviously the fact that it's come up in the scan means that our three trends are in alignment, that the relative strength is outperforming in all three time frames against the benchmark index. They're all givens because otherwise they wouldn't come up in our scan. So what I like to do on these charts is take all the rest of the information off and really try and narrow it down and make it clear to see. So what I'm focusing in on here is price action. And the price action filter that we use is really important. What we're looking for is the most recent trough to be at or above the second from last peak. So there's our last peak, there's our second from last peak down here. Now I'm assuming at this point in time that this black candle is going to represent the extent of this short-term downtrend. And by virtue of that, I'm expecting that over the course of this next week, as our market picks up, that price is likely to turn around and produce another candle which has a higher high and a higher low. So that will turn us from a short-term downtrend into a short-term uptrend. So if that's the case, then this black candle will be the candle that has produced the medium-term trough. So is this trough at or above the second from last peak? Well, that's not exactly right because we're not using the low part of this trough, we're using the close of the candle that formed the medium-term trough. So I'm expecting this candle to be the candle that has formed the medium-term trough. Is the close of this candle, now where did it close? Not up here, but down here. Is the close of this candle at or above the second from last peak? Last peak, second from last peak? Yes, it is. So it passes our price action filter. A long-term peak over here, which we've clearly passed. Price has broken through that already. It's come back. I'm expecting this to be forming a medium-term trough, so a medium-term trough proxy, if you like, because we don't have that confirmed just yet. On the basis of that, if price does come up and trigger the medium-term peak level, then it opens the door up to this old level up here of 137.60. So why have I got 137.60 there rather than $1.50? Well, that just happens to coincide with a previous long-term peak. So those of you who are looking to scale out and use those points at which to take some profits, I've just highlighted that for you so you know whereabouts that is. Okay. Now, as we go forward, what I'm going to start doing with these sorts of setups is I'm going to start looking for setups where there has been a retracement but where we also have a bullish candle. Okay, much more likely when we have a situation like this and then we have a bullish candle that we're going to get the turnaround sooner rather than later. So that's something that I'll present during the education session and start bringing into the weekly analysis sessions as well. So that's Fairfax there, entry level $1.11.5, protective stop 98.2 cents, and a scale out if you're scaling out at 1.37, so $1.37. Next one on the list, TNE. Now an example again, in terms of price action, expecting this last candle to be a trough, that the short-term downtrend will be turned around and price will start to move back upwards again. If that's the case, then this will be the medium-term trough. The close of the candle that formed the medium-term trough is well above our second from last peak. Last peak, second from last peak. So price action on that side of things is very, very strong. In terms of opportunity, well, again, if we're thinking about round numbers, for those of you who do want to scale out, $5 is the logical target there. Alternatively, all we need to do to stay in this trade for as long as possible is wait for price to move up. Now, as price starts to move up, if it does happen to trigger our entry level at 433, at the same time, what's likely to happen at that point in time is that this trailing 3 ATR will start to move up as well. So by the time this triggers, you won't have to wait too long for this trailing 3 ATR to start moving up towards your initial protective stop. Now remember, your initial protective stop is a soft stop, so soft stop rules apply. So if you're in any doubt about soft stop rules, please consult your trading plan. If you still don't understand, then again, give one of us here a call and we'll go through and explain that in clear terms for you. So TNE set up there. The next one, TNE entry at 433, stop loss at 380, and your first scale out at 494 for those of you choosing that method of taking profits. I think that was primarily it, TNE. I did have a couple of others in here that I thought were interesting. Let's have a look. There we go. We have Aristocrat. Again, if we look about the price action on this one, I am expecting that this candle, the last candle, is going to be the trough, so a trough proxy. The close of that candle that formed the trough proxy, is it at or above the second from last peak? Yes, it is. So that ticks the price action filter. Obviously, relative strength, the three trends, etc., have all been picked up by our scan. For those of you who are looking to take this entering at 876, stop at 788, which is outside of 2 ATRs and 0.5% below what I'm expecting to be a medium-term trough. And for those of you looking to scale out, first scale out there at just below the round number of $10, so that should be $9.89. So that was Aristocrat. Another one that I had in the list here was Macquarie. Again, Macquarie's been on a tear since it's broken around about $60, moving very strongly up to around about $85 and coming back down. The banks this last few weeks have been hit pretty hard. Macquarie standing up pretty well there relative to the rest of the banking sector, and I think this is also one of Jeff's that he likes in the banking sector, one of the few banking stocks that he's in favour of at this point in time. So obviously during the course of last week, price coming down to around about the $75 level and rebounding strongly later half of the week. If price gets above our last medium-term trough, medium-term peak there, an entry level of 84.21 opens the door up to the next big round number of 100, and if you're scaling out, then obviously $100 less 1% less a pip takes us down to 98.99. Again, for those of you who are using a trailing stop methodology, we don't need to do too much about this, because once price triggers, all we need to do is wait for our 3 ATR line to come up and pass our initial stop, and you'll see at the moment that it's actually pretty close there. And it's close there because this short-term downtrend has been reasonably large. So it's nearly 3 ATRs from the top of the last medium-term peak here down to what I'm expecting to be the medium-term trough. Okay. So should that happen to trigger, it won't be too long before we trail that the stop on that, because the trailing 3 ATR line is very close to the initial stop. So that was Macquarie. There's a couple of others that I just brought up for chatting. One of them was LNG, liquefied natural gas. Price action and everything on this is really good. The only element that's upsetting about this is the potential for the round number there of $6. Again, just thinking that initially I like to have a reward that I can see, even if we are in blue sky. If there is a round number, then I can clearly say, well, look, in terms of measuring, a risk to a potential reward, well, certainly $6 is a round number. If we choose to ignore $6 as being a round number, then we're in blue sky and the trade could really go anywhere. If we did the risk reward on this from our entry, once we pass the last medium term peak, and our initial stop setting being at $4.10, that's 2 ATRs below our entry level, and obviously well below the last medium term trough, and I'm expecting this to be the medium term trough. If that's the case, then we don't quite get 1-to-1 into $6, But if we ignore the round number, then certainly there's a lot of upside for this particular trade. So if you just happen to choose to ignore the scale outs along the way and you want to trail your stop, then all we need to do is wait for our trailing 3 ATR line to come up, pass our initial stop, and then we can start trailing on the basis of our green 3 ATR line. So that was LNG. Entry there at 5.03, initial stop at $4.10. Upside potentially unlimited unless you are using a scale out of $6. The other one here, Harvey Norman. Now, Harvey Norman looks a reasonable sort of setup at this point in time. The only thing, and I put this on for discussion, is that whilst the price action is very good, and this trough is well above the second from last peak. There's our last peak, there's our second from last peak. The one thing that was stopping this was way back a number of years ago. Over here in 2009 we have a long-term peak, and that long-term peak has just had a first test. We're coming up. If we do happen to pass that, the only thing then that's in the way is the proximity to $5. So we don't quite have enough space around this trade to get the trade structure that we would really like. So we're having that first test, that long-term peak, which is great. However, in terms of risk to reward, if I'm looking for a target, then that $5 is just a little bit close. Now obviously if we're not using the round numbers, then we've got a lot further upside. So I haven't put that one in purely on the basis of the round number at this point in time. The other one that I had on the list, I think that might have been it. Yep, that was it from this point in time. Okay, so that's the ASX weekly pendings for this week. Let's go through and have a look at the US, the pendings. There was quite a lot of potential opportunities, and it's something that over the course of the next week or so, I'm going to go through and provide another suggestion on how you can actually cut down the number of scans that you actually have to look at. Going through one of the US weekly scans, the loose scan last week, I ended up with around about 530 odd results came up, and with a little bit of clever use of Beyond Charts, I was actually able to get that list down to 392 directly from the scan. So that's something that I'll be showing you how to do as well. Those of you who know a little bit about Beyond Charts formula language would realize that you can actually add formulae together. And some of the formulae that we have bullish candles, we have strong demand candles, we have 3-bar reversals, etc., which are all confirming candles, if you like. So you can actually create an indicator that highlights when you have one of those 3 conditions, and that's one of the 3 conditions that I was able to use to cut down my list of scan results from 529 down to 392. So around about close to 130 less hits, just on the basis that the scan results, I was asking Beyond Charts to show me those scan results that only had those bullish candles when we'd had a bit of a retracement, and that was useful, and it's something that I'll certainly be integrating as we go forward. But one step at a time, and just to put you all in the loop, so to speak, what I intend to do, just with some of these small changes, is just to produce a checklist that I will get put up onto the website that we can go through just to make things easier. So not hugely different from what we've been doing. The really important aspects of your trade management, we've made a small adjustment there. But the non-negotiables as far as your trading is concerned is you must have relative strength outperforming the broad benchmark, you must have the relevant price action as well, and your initial protective stops must always be below the last medium term trough, and they must also be at least 2 ATRs from your entry. So that's the same as always. I'm just finding ways to make your trading process a little bit quicker, a little bit simpler, so that you're able to get to that competency level a little bit faster. Alright, that's enough waffle, David. Let's get into it. So the weekly pendings. Alright, so the first one that I had on my list, and I'll just go through and bring up my list at the moment. Weekly pendings. We'll go ADS, I think was the top of the list, so let's go up to there. Nearly there. There we go. ADS was the first one that I had. Oops, that's last week. That's Skyworks from last week. Hasn't triggered yet. ADS was the first one that I was looking at here. Again, so let's use our price action. I'm expecting that this last candle is going to be the medium-term trough, and as such, where is its close in relation to the second from last peak? Last peak, second from last peak. It's well above it. So if we enter 2 pips above the high of our medium-term peak, you're entering at $312.02. Stop loss needs to be below our last medium-term trough. Well, if price is going to move up here, that will make this last candle the medium-term trough. So I need to be at least 0.5% below there, but I also need to be at least 2 ATRs below my entry point. So our initial stop is at 285.22. Our first target, if we're using targets, is $350, so less 1% and a pip. So the main target there is 346.49 if we're using round numbers. In terms of risk to reward, that produces a 1.28 to 1 reward compared to the initial risk. So that's ADS, enter at 312.02, stop at 285.22, and round number target 346.49, just below the 350 level. Next trade setup, again ALR, just past the $50 level at the moment, which is great. In terms of our price action, I'm expecting that this last candle is going to form a medium-term trough, so a trough proxy if you like, and you'll see that it's a bullish candle. How do I know that? Well, it's got a little green dot above it, which tells me so, and that's a confirming candle. So over here, you'll see formula for confirming candle. Now at the moment, you won't have confirming candle in your list of indicators, but all I've done through the use of Beyond Charts is I've created a very simple formula where I've just added together either a bullish candle or a pin bar candle or a 3-bar reversal, added those together and called it a confirming candle. So now when I apply that to a chart, it's rather than having lots of different green dots with numbers and whatever, it's just showing me, okay, this is a bullish candle of some sort. The fact that we have had a short-term downtrend, this is likely to be our medium-term trough. On that basis, if price turns around and breaks above our medium-term peak, we have a breakout. If this is the trough, where is the close of this candle in relation to the second from last peak? And you'll see quite clearly that the close of this candle, if I put on a horizontal line, close of that candle there is at or above the second from last peak, and it's above the second from last peak. So from that point of view, the price action filter, we've ticked the boxes. If price triggers beyond our medium term peak, it opens up the door to at least the next round number, which is $60 for those of you who are using scale outs, and that produces a trade with just under a 2-to-1 reward to risk. So entry level there on ALR 50.63, protective stop 46.05, and scale out. Now with a bit of luck, One of the things you need to be mindful of in Beyond Charts is when you're putting in your lines for your medium-term peaks, they tend to coincide a lot with this little line on the side of your chart which you grab, and you can actually move the chart up and down, and you'll see there that the numbers on the side aren't changing. Okay, but because that little line there that you grab to move the chart up and down is so close to the horizontal line, it's very easy to accidentally grab the horizontal line and change the parameters, change the figures. So you just need to be a little bit careful of that. I'll just put that back on and make sure that I haven't changed that. The high there is 50.61, so our entry level should be 50.63. So I did change it. So I'm going to move it back. 50.63 and apply, and that's in there now. I'll go over to my analyses and I'll just save that. There we go, so that's been saved. So trade there just under 2 to 1, and that's on ALR. The next one that I had on the list here was ANTM. Again, in terms of setups, etc., nice strong bullish candle. It's come off this short-term downtrend. We've put in a trough. The candle that formed the trough, its close, is it at or above the second from last peak? 1, 2, clearly above it. We've only got to get past our medium-term peak, and it opens up the door towards that 200 level. So that's a nice trade there. 2.85 reward to risk on that one. If you're using a target of some sort to measure your trade opportunities by. So entry level there of 160.66 and a low there of a protective stop of 147.54 and a scale out just below 200, 197.99. Next one on the list, AWH, similar sort of setup in terms of price action. Nice clear price action, trough at or above second from last peak. We've only got to pass the last medium term peak, and then that opens up the door to a move up towards the $50 level. So in terms of targets and risk to reward for that particular target, you end up with a 2.77 reward to initial risk. So entry level there at 42.77, initial stop below the last medium term trough outside of 2 ATRs at $40.35. That's AWH. I've got a couple of questions coming through there, so I'll address those in a moment. I'll just finish these up. The next one, AZO AutoZone, similar sort of setup again. There's our second from last peak there. There's what I'm expecting to be the candle that forms the trough. Now the candle that forms the trough, the close of that candle, where is it in relation to the second from last peak? It's well above, so it passes our price action filter very clearly. We've just got to get past our medium term peak, and entering at 706.02 is the entry level. Initial stop, we must be below what I'm expecting to be the last medium term trough at 659.55 is where our stop is. Below that last medium term trough opens the door up to 800. Those of you who are still using round numbers as a scale out opportunity, setting limit orders at around 791.99. Charles Schwab was one that I was looking at, but decided not to for a number of reasons, and I'll get back to that one shortly. ASR was another trading opportunity here in the US. Again, price action filter. I'm expecting this last candle to be the candle that forms the trough, the close of that candle at or above second from last peak. We've only got to get through the 154.31 level, which is our entry, a stop down at 138.03, and on that basis that opens the door up to a fairly large move up to around the $200 level. So as a result, risk to reward, reward to risk on this trade, 2.68 to 1 on ASR. So entry level 154.31, initial stop 138.03, and scale out at 197.99, just under the $200 level. Or alternatively, we can just sit and wait until our 3 ATR comes up, passes our initial stop at 138.03, and sit in it for as long as we can until price eventually closes below that trailing 3 ATR line. Next one, China Biologic Products, CBPO. Sounds like something out of Star Wars, doesn't it? Price action, very nice price action here. Shallow retracement, bullish candle last week as well, which is all looking really good. We've just got to clear this last medium term peak at 102.82 is the entry level. Our stop, 2 ATRs below our entry level and below our last medium term trough, has our stop at 90.65. Round number scale out, opportunity towards the 120 level there, and initially that gives a reward of 1.3 to 1. So a nice strong move through here, having a bit of a pause and looking like it's ready to go. Again, nice strong candle last week compared to what happened to the rest of the market. So again, relative strength, really important concept, and you've all got that in your scans. So hopefully you come to appreciate that as well. I think we're getting close to the end of the list here. CoreLogic, I don't like this one quite as much, even though the upside opportunity is a little bit better than some of the other ones. Last candle a little bit indecisive, but certainly if price does turn around from this point, then clearly in terms of risk to reward presents a nice opportunity. So an entry level here, just above this last medium term peak at 40.77, protective stop down at 37.03. Scale out objective there just below $50 at 49.49, and that presents a reward to risk of 2.33 to 1 initially, that is, unless you're going to trail your stops and look for that bigger run from that particular trade. Now I'll just have a back to my watch list here and see CLGX. I've got a couple more in there. DST, another opportunity here. The previous week having a bullish candle, which we should have picked up on last week. I didn't see it in the scans, but the other element of this one, why it wasn't included last week, was obviously just the proximity to 120. So I've put this one in for discussion, if you like, in that if you're using round numbers, then this is a trade that we have to wait until we get past 120, because 120 is a round number. However, if you were to take the trade on the basis of the round number, the risk that you're taking on compared to the reward, I think, justifies it. If you wait for the round number rule, and the round number rule, remember, is if you're aggressive, 0.5% plus the round above the round number, plus a pip, so 0.5% of $120 is 60 cents, plus a pip makes it 61. So if you're using the round number rules, you're getting it at 120.61. Your initial stop still needs to be below the last medium term trough and 2 ATRs away from your exit. That would have your protective stop at 112.59. The only reason I put this in, because it does have a pretty good risk to reward at 2.24 to 1 up to that $140 level. But other than that, the price action on this is very, very strong. And again, whether you choose to scale out or choose to use your trailing stop, you won't have to wait too long for that trailing stop to move up. Alright, next one. So that's DST, entry 120.61, protective stop at 112.59, and looking for movement up towards the 140 level. Next one, Goldman Sachs. Opportunity here through the just past the $200 level. You can see price has sort of stagnated for a period of time here. If I just draw this in through this particular level, and really finding a floor on a couple of occasions. Obviously finding a bit of a ceiling up here. The clue that this thing is starting to move, we've got the formation of these higher troughs. Price has just started to move out of this this box area, if you like. So these areas here representing points of supply. Price moving up to those, through those points of supply, removing a little bit of that supply, having a little bit of a retracement, seeing some demand coming in through this level at the moment. So old points of supply starting to act as future points of demand. We just need to break our last medium-term peak. And if we can do that, then we clear the upside up towards the $250 level mark, which is quite a nice reward compared to the initial risk. Our price action, well, if price is going to move past this medium-term peak, I'm expecting this last candle to be the candle that forms the medium-term trough. The close of this candle, is it at or above the second from last peak? There's our second from last peak. It's well above it. So from that point of view, ticking the boxes on the price action filter, an entry level 202.89, initial stop 187.47, and target up towards the 250 level if you're choosing to set a limit there, less 1% plus a pip, so that's going to have an exit level of 247.49, and risk to reward 2.89 reward compared to risk. Next one on the list, we must be just about there. Howard Hughes. Okay, interesting to see this one. Over here, we've got a long-term peak, the highest point between our medium-term uptrend and our medium-term downtrend. Price has come up and tested that, remembering that we have to come within 1% of that long-term peak for it to be considered a test, which we've already done. In terms of price action, I'm expecting this last candle, which is bullish, to be the candle that forms the medium-term trough. Where is the close of this candle in comparison to the second from last peak? 1, 2, clearly above. So we've just got to get through this medium-term peak, in fact this long-term peak over here. We've had our first test, we've come within 1%, so our long-term peak plus 2 pips, so 160.64 will see us entered. Initial stop 2 ATRs below the most recent trough as well, so 0.5% at least below there has our stop at 144.94, and targets up towards the $200 level. Well, got through most of them. We're just about gone an hour. I'm going to have a look at some questions here before we say goodbye. So let me just scroll back up the list a little bit. Okay. Yep, good question, Kay. Kay's asked a question here. David, though we may not be setting targets, do we still need to confirm one-to-one risk reward into round numbers or previous long-term peaks? Absolutely. Long-term peaks are really important and will remain important. So I'm wanting to make sure that whenever we're looking for a setup, if there is a long-term peak, it must be respected. Okay, long-term peaks are there for a reason, and they are generally there because there's been some fairly large market news that has turned what was a very healthy medium-term uptrend into a medium-term downtrend. They are significant points of supply, so absolutely we must count those. And in terms of taking any trade, we need to know that we've got at least 1-to-1 for any opportunity. Now, if you're in blue sky, you may well say, well, look, I've got an opportunity, to go anywhere. I might be sitting at $100, and potentially it could go to $200. I think we need to be realistic and still set some realistic opportunities or objectives for it. And I don't think it hurts to think about some round numbers. We know that quite often price does pause at round numbers. So I think in terms of using that as a opportunity, if you like, to measure your risk compared to your reward, I don't think it hurts to do that at all. I think that makes good sense to do that. T&E, John, an order from 27th of April. I'll have to go back and have a look at that. It may well have been that there was a previous order in there, I'll go through and check that for you. Absolutely, John. So thanks for bringing that to my attention. Okay, quick question on ALR. Okay, let's have a look. ALR. Oh. Just want to bring me back to ALR. Maybe I'll have to go back up. There we go, ALR, just zoom out a little bit. Okay, quick question on ALR. As the second last candle is part of the medium term downtrend and its close is below the second. Yeah, look, that's a really good question, Kim. What Kim's asking is saying the second last candle here. It's a really interesting question because we're in short-term downtrend here, and the candle that has formed the low here, there's a low there, or what we think is going to be the trough. The low there is 47.29. The low there on that one is 47.30. So which one do we use? Well, at this point, the lowest candle is this one, the 47.29. So this is the candle that's going to form the trough, so we have to use that candle as the reference candle, and we're using the close of that candle with respect to the second from last peak. Good question, Kim. I like that question a lot. Alright. Okay, why using weekly and not daily? We're using weekly because it's the medium term session, and we only use weekly charts for that. Goldman Sachs was my pick too. Okay, well done, Kim, but I had a different stop loss level. I've double checked the 188.77 seems more appropriate. Thanks, Kim. Okay, thanks, Sia. Thanks, Tony. I can't see any more questions, folks, so just remember, again, very subtle changes to what we've discussed over the last week. We're looking for the price action filter. Remember that. It'll make your work so much easier. Your initial stops must be below the last medium term trough outside of 2 ATRs. Other than that, trailing of stops will only occur, and this will be reflected in the weekly watch list when that trailing 3 ATR line comes up to your initial stop loss, and there from then onwards all we need to do is look at our trailing 3 ATR line and see where the stop loss is and amend it accordingly. Okay, and remember that the use of both your initial stop and the trailing stop are soft stops. Well, that's it for today, guys. Don't forget the education session on Wednesday afternoon at 4 o'clock. It's also recorded, and we will send you out a recording. I'll send out the watch list shortly, as well as a recording of this, and Friday afternoon brings the macroeconomic session. So hopefully you have a good week on the markets this week, and our markets turn around a little bit on the basis of what's happened on the US over the weekend. But I look forward to catching up with you, hopefully all at the education session on Wednesday. Bye-bye.